Hey guys and girls, Nathan here, just for our Tuesday night chats as always. A little bit late today, I was getting some little props ready, which took me a little bit longer than usual to hop online. So yeah, got a few things to talk about today. Hopefully you guys have had an awesome week and you guys are cleaning up and taking advantage of the world that's around us at the moment. So today, I've got a lot of questions and comments and stuff like that from you guys. If you do have questions and would like me to answer them this evening, you know what to do. Flick a message into the comment section below and I will answer them for you. So yeah, getting into the start of today's topic, what would I start with? I'm going to start with some of my props, right? And this one here, I don't know how easy it's going to be to put up on the display. I just had to wash it. I took it out of the back of my tray of my truck, and basically, it is this. So a lot of you may be asking me, what is this? What's Nathan bought on as his prop today? And this is something I found on the weekend. And what is it that you may ask? I've finally cracked the riddle as to what this is. So what it says, it's got these 4 panels. It's a piece of tin. So I'll start from one end and go through. It's got 4 equal parts to it. It's a piece of tin, and on the tin it says "Tin made in Australia, Bio Co Limited," and it's got like a shell on it. So you can see on the bottom there it says Bio Co. On the top it says "Tin made in Australia" on it. And you may be wondering, what is this and what relevance does it have to our Tuesday night chats? And that's I saw it. I didn't even know what it was, and it took me about 24 hours to find out, what I had discovered, and I got a cool story behind it. So I'll start off with my new little friend, and for those of you that are following me on my personal Facebook page and Instagram page and all that, you may recall some videos that I posted on the weekend. I posted some videos out at my solar farm that I'm trying to build, and that is on 5 million square meters of land. Rough sizing of it would be the size of a new residential subdivision sort of estate of a property. So what I found on that, my mate was out there and he's doing some work. He's an electrician, mate of mine, John. If you're watching this, John, shout out to you, mate. He found this building, right? And he found this building, and I posted it on my YouTube video. You can see here, this is cladding, right? And I was like, is this some sort of pressed sheeting that you would find in on a property? Well, this place is a bit dilapidated, and I was like, this house must be sort of like, I don't know, 100 years old. And I put the photo up onto Facebook, and I shared it, the videos, and some people sent me over, oh, it could be an old shell can, right? And it was funny because it has a shell on it, but it just says Bio Co Limited, and it says "Tin made in Australia." And it wasn't until I almost got back home, I was on the phone to one of our investors, and he said to me he'd seen the video, and he goes, "It looks like an old shell tin." And I was like, okay, that's interesting. And then I've found some parts of it. So here is one on eBay. This is it here on eBay. A part of that, and it says "Rare Rusty Remnant, Framed Early Impressed Script and Logo, BIO Shell Drum Side." Right? I was thinking, like, is this house made out of pressed tin? Is it made out of, it looks like it would be something off a jerry can. It looks like my mower can that they've unwound, but it's got 4 equal sides. So if it had 4 equal sides, it would mean that the can that it came from was 4 sides, right, of equal side. And I'm like, I've never seen a square can beforehand in my life. What is this can that we're talking of? So I'm just trying to go back onto eBay and bring it up because there's a bit of a story in behind it. I'll bring it up. Give me 2 seconds. Rare, rusty, uh, BIO, rusty shell drum. So I'm just going to read into it. There's two of them. You can see this one a little bit clearer. This one's, they're just bits of the drum. They're just bits of the drum. They're not even the full drum. Goes on to read, where is it? And there is a end to this story, by the way, guys. It goes here, up for sale, rusty, rare, remnant, framed early in press, script and logo, BIO Co. Limited, being British Imperial Oil shell drum side. So it's British Imperial Oil shell drum side. It's only one of them. It's only a part of it. It's just got like the logo. It doesn't have anything left of it. And it says it has a scallop shell, estimating this rare one to be around the mid 1920s prior, and seems to be a transitional piece when Bio started trading as shell in Australia in 1926 to 1927. Has impressed script and logo, was off a 4-gallon square drum tin that was deceased and totally rusted out. A great filler or reference. Only one I've seen. Had to save. Drum was completely shot and could only recover the lid to this condition. It is original slight green tone paint. Does rub, wear, surface marks, scratches, blah blah. So I was wondering, like, why would someone make their house out of tin? And I found another one here. This is a part of a tin. It's going for $80 on eBay, right? $80 on eBay. So this here goes to show, and it has other photos there, and it's the same thing, and it's the only one I could find, and it is of a part of a drum, right? And here we are. We've got, for those of you that are joining now, we've got the drum flattened out into one solid piece. And I was thinking to myself, that is really interesting. And then it led me back to the eBay description of, you know, here's a drum for the 1920s. Why would someone build a house out of a drum in the 1920s shell drum? And it occurred to me, what happened in the 1920s? We had the Roaring Twenties, which was fantastic. It was a fantastic time. They did money printing and, you know, creation of, you know, wealth like never ever seen beforehand. And then we came to the 1930s and we saw the Depression, right? And, you know, we all know someone that's old. If you're, you know, 20 years old and watching this, if you're 30 years old, however old you are, go out and find a grandparent, a great-grandparent, and speak to them and say, hey, do you know anything about the Great Depression? What was it like in tough times in years gone by? They will tell you, you know, there was things that they used to eat. They used to eat, you know, dripping and bread and all this stuff that sounds like really disgusting. They didn't have electricity. They didn't have, you know, a fridge and a freezer. They didn't have their air conditioner going in the background, and life was very different. It appears to me that these cans were made in 1920s, right? And imagine having all these cans around and you're so broke, you're so poor, you can't even afford to build a house, right? And they've literally, whoever it is who owned this property or was on the property, built a house out of fucking oil cans. Oil cans. Who would have thought? That's just one of the parts of the wall. I think there might be about, you know, 200, 300 of those sheets of oil cans. This person who lived at the property, at the farm, would have cut these oil cans up, stapled them together, and built a house because they were that broken. And that, my friends, is what the Great Depression looked like. When I go out to the shops and I might go for a restaurant, I don't see people going, oh, give me some food, right? That's not the world that we're seeing at the moment. We're seeing, you know, people waiting in there with their backpack and with their push bike helmet on, getting the Uber Eats, the menu log, delivering that to people. People have got everything. They've got the world at their fingertips, right? In the 1920s, they didn't have that. There's different ways to manipulate this system. And I'm about to share with you guys some articles from things that I'm just seeing out there in the market at the moment, which is really interesting. So I'm going to start I'm going to keep some um, articles for later, which is maybe geopolitical sort of stuff that we can talk about. But let's talk about the real serious issue at hand. This time last year, in September 2019, long before anyone knew of some Asian eating a bat in the backstreet of China, right, allegedly, right, causing the world to go into this disrepair. And one of my next topics that I'm going to talk about in the news articles later is about the China alleged sort of tensions that are occurring. But it's funny that they've pinpointed China as being a cause of a virus and whatnot. Who knows where it was created? Who knows what it is? But allegedly it was. But we've got to look back in September 2019, where the repo market imploded. And no one talks about this, and I don't have any articles on it at the moment, but talked about it heavily last year, talked about it very heavily in Birchfeed. The repurchase agreements, basically the short-term lending market was manipulated. The central bank, the New York Federal Reserve, started printing off money or currency to the tune of $100 billion per day. That was $100 billion per day, and it was being injected in the system. It was meant to last a week, and then a week turned into a month. And then it increased from 10 billion to 20 billion, 20 billion to 50 billion, 50 billion to 100 billion, 100 billion to 150 billion, up to like $200 billion a day. They were printing in September last year, well before any of this, said virus or whatever was around, and we've been in the shitter for a long time. We're starting to see some interesting things occur. I'm going to go to our M1 and M2 money supply. I think that might be our funnest charts to go to. So a lot of you guys and girls think that I'm hilarious when I have pieces of paper and I have charts. So I have some of these things, and maybe if we're all lucky, I'll swear a lot, I'll scream a lot, I'll throw pieces of paper around as I share my story. So here we are looking at the M1 and M2 money supply. So this is the M1 money supply here. Something is very different this time that we did not see in the Great Depression. This is a max chart on trading economics for the M1 US money supply. That is the chart that you see before you on this screen. If we have a look at this chart, we've seen here, this is here, $2 trillion, $4 trillion, $6 trillion. That's on the chart before us. We've literally got here from the 1960s, started this nice curve as we went into the 1970s, a very nice flat curve. Then it started to become a bumpy ride as they had to manipulate and navigate through this new system. We've literally got here, maybe, I don't know, let's say that's 0 billion, that's 2 trillion. We might have here for from the 1960s, 70s and 80s, and even in the 90s, maybe $500 billion to $1 trillion worth of money in the M1 US money supply. So that was 1960, 70, 80, 90, 60, 70, 80, 60, 70, 70, 80, 80 to 90. 30 years, right? 30 years of $1 trillion worth of money creation that we can see from here to here. That is a pretty flat line, right? And then once we get to the 90s, we had an issue in the late 80s, started to recover into the 90s, and around 1992, 1993, it all sort of fixed up, and here we go. So we got through to the year 2000, pushed it up. Just before the GFC, or when the GFC occurred, they had to print a lot of money to save ourselves from where they were. So suddenly, in around 2008, 9 and 10, they went into quantitative easing 1, 2 and 3 being Operation Twist. They printed all this money. So think about it, right? 2008, 2009, what happened in that period of time? We saw every financial market take off. We saw property prices skyrocket, shares skyrocket, cryptocurrencies come up from nowhere, right? We saw everything start to skyrocket. There were so many experts which came out between this period and this period. You see it started to taper off. If we look at some other charts, it will show a slightly different story. However, look at this, right? It took 30 years to get to $1 trillion. It took another sort of, let's call it 10 years to get to a second $1 trillion. So 30 years to a trillion. Another trillion took us, how long did it take? 10 years. Then to get another trillion, it sort of took maybe 5 years. And then you get to another trillion, took another 5 years. And then it took 1 year to get another $2 trillion. We printed $2 trillion in the US M1 money supply this year. Everybody's feeling like they're some fucking hero, that they're making all this money. They don't know how smart they are. They've bought some shares. They've got their 2 shares of Amazon, and they're suddenly a gazillionaire. If we have a look here, we have the United States M2 money supply. It tells a very similar sort of picture. We have 5 trillion, which is here. So it literally took all the years in history, like literally 200, 300 years of history, let's call it 200 years of history, of the US currency to get to, in 1968, before the monetary system got manipulated. You can see just when it took off, right? It was flat all the years before this. When we got to 1968, it's about 1971 here, the market started to take off, right? We weren't even at $1 trillion here, right? Maybe a half $1 trillion, and then suddenly it started to take off. And then we got to around the 92, right? Everyone's like, oh, Paul Keating, he caused a recession, the recession we had to have. We had to go bankrupt. Everybody hates Labor, whatever the case may be. I'm politically atheist. I wouldn't be voting Labor, but, got a question, which Muppet do we want to, vote for? But if we look here, it's a recession we had to have in 92, but this is the US, remember? This isn't Australia. We saw what happened to money supply. It started contract and then it took off. Got up to there. We're up to $20 trillion. Look at how straight this is. Never before in history has it gone straight. Never beforehand has it happened like that. But it did in 2020. And each year it progressively got further and further. It was like, soon it's going to go backwards like, Donald Trump's hair or something. But who knows what's going to happen with these charts. That is the level of manipulation in the world that we have today. And if we look at our friends, being us here in Australia, right, what does our chart look like and what does our chart tell us? This chart here, I think, is just a 10-year chart of the M1 money supply. We're at 400, 500 billion, and then we started printing all this. Who remembers their house prices? The house price is going up, house price is going up, we're so awesome, and then boom, 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 we're in a bit of trouble. And then early, or about mid of 2019, what is the money going, and what did we print this money for? It went straight up, and then it started going sideways, then we went up again, and here we are. Look at the level of currency control here, right? Look at the level of manipulation, right? May as put it like that way, because that's literally what's happening to the dollar. It should be this way, but that's the purchasing power of the dollar. Everyone's feeling richer and richer, but they're just buying less and less with their currency, because their currency is being raped and pillaged. Right? That's why we don't see this sort of scenes where houses are made from old oil cans, like we just discussed beforehand. What will happen from this? What have we seen in 2020? 2020, for me, I've got another little surprise here for people, which I'll talk about randomly a little bit later on. 2020, right? We have seen so many things sort of come to play this year. We have seen, currency manipulation like never before, media manipulation like never before, people questioning the system, people questioning the government, people questioning the lies that they've been fed. We've seen things that just don't add up, and that's the exciting world that we live in. I've never been more optimistic. I've never been more excited. If we think about the Great Depression, sorry, just got my water. The Great Depression was very, very different to what we have at hand here. In the Great Depression, they had to manipulate currency. They had the Gold Confiscation Act of 1933. They debased currency. They tried to suppress and debase currency back in 1933. In 1971, they finally got their way. That is why we are seeing the currency go off a cliff. No? Um, However, before the 1930 depression, there was a thing called the Roaring Twenties, and not saying that because we're in 2020, but the fact that the decade beforehand, there were some amazing things that were occurring, and I think that's where people need to be really conservative with at this point, really questionable at this point, but due to the level, let's go back to my charts that I threw down here. We have never seen currency manipulation like we have. And it is not just, oh wow, this is just something that had to occur, right? This has been progressively occurring for a very, very long time. Now, we're at a point where we can't return to where we were, and we're going to have massive destruction of our currency, meaning inflation and the cost of goods to rise over this next decade. And I think that's an amazing opportunity for all of us to capitalize on and take advantage of in the markets. Surprise, surprise, right? Surprise, surprise. We printed this year. This here is an article, I think it's from, this one's from Trading Economics, but it's about the GDP. I shared this with you guys last week. However, we didn't have this part to it. We saw the economy just bouncing along, being manipulated, and then that there would serve cause for a depression. However, we didn't have a depression at this point. What we did is we just printed our way through it, and we have got this spike here. So think about what we just did. We printed all of this currency that we've seen in 2020. We've seen it go through the economy, and we've seen a massive spike in inflation. So this is the GDP, sorry. So if we look at every month beforehand, they were all sort of, every quarter, they were like less than 1%. We saw the largest loss ever in history, followed up by the largest growth ever in history as well, right? Is that shit normal? No, it's not. Is it sustainable? No, it's not. Was there any more jobs created? No, less people employed at the moment. Was there anything fundamentally different? Did we produce anything else? We haven't produced anything. We're lazy fucks here as a nation, and every other nation is. Once again, I'll get back to our friends at China a little bit later. That is not a normal chart, right? What will occur from this? We're going to find people that are at massive wealth inequalities here. People have been like, oh, these people are rich or these people are poor or whatever. We're going to see a massive divide over the course of this next decade. And that is the opportunity, because which side of the pendulum will you be placed on? Will you be at the poor end, or will you be at the wealthy end? How can you capitalize on this market? How will you get totally destroyed in this market? That's stuff that I help work with all of you guys on a day-to-day basis. Looking at some of the articles that are coming out, this one here from news.com goes on to read, Australia's economic rebound, GDP rises 3.3%. Now, it's very funny, right? Because I always talk about the number 3. It means a lot to some certain people, and it's certainly, every time you see certain numbers out there in the media, certain things occur, right? It's just funny that we've got 3.3%, so 330 basis points, something like that. And it's come from the Treasurer, from their communist-looking Canberra that they are based at. So, it goes on to read, the recession is officially over, with the Australian economy growing 3.3% in September quarter. According to new figures, the economy went into recession in the June quarter after the worst contraction in gross domestic product since World War II. World War II, people were making shit out of this sort of stuff, right? Pay attention to the signs, guys. There is lots of signs out there. The Australian Bureau of Statistics on Wednesday confirmed an uptick in GDP after shrinking 7% in the previous quarter. So we've gone from the lowest lows to the highest highs ever. Real GDP increased by 3.3%, beating market expectations. This is the biggest quarterly increase since 1976. So if we think about, if you had $1,000 at the start of this year, You could have put in a fixed term account. You could have put in a bank account. Would you have got 3%? Would you have got 3%? Who knows, right? You wouldn't have got it, right? That's what you're paying for your mortgage nowadays. If you were to get 3%, you would have just caught up with this quarter's GDP. The cost of everything is rising massively. If it tracks at that level, it's going to be 12% inflation for the year, right? But it's not real. Some people are very wealthy now. Some people are very poor. I hope we're starting to get the picture. Some people are very rich, some people are very poor. You can choose which end of the spectrum you wish to be on. That is why I'm the most excited, the most happiest that I have ever been, because I can see the hands at motion, I can see the wheel at play, and I can see how most people are getting screwed, and they don't even question it, right? How do we end up there, right? They just put the printer on, and they just keep printing and printing and printing. Now, a lot of people are concerned. They said, look, in September, the property market is going to crash. We've seen it grow, right? Just some sort of numbers. If we look at Sydney market's quite nice. If we look at Central Coast in New South Wales, everything's booming. Everything's lifted by $100,000 there recently. Anyone that owned on the Central Coast at the start of this year just made 100 grand minimum, right, on their property. If we look at the Gold Coast in Brisbane, there's nothing around, right? I've been buying in this market for a very, very long time. I've bought up, probably been the largest buyer throughout the Southeast Queensland market. Am I still active in there? Sure. Am I still aggressive as what I was beforehand? Not as much so, because I went in when everything was shit and I'm picking things up on the cheap, and I just made deals, right? I personally own sort of like 50 properties in Gold Coast and Brisbane, Brisbane in the Southeast Queensland corridor. I'm looking at rents at the moment. A lot of rents up there have gone up by $40 to $100 per week over the course of the last 2 months, right? And there's lines up. We've got 3 properties. We've got thousands of properties that we manage. Just in that Southeast Queensland, from sort of Tweed Heads to Brisbane, and looking at the amount of rentals that we've got, I think we've got like 3 or 6, something like that, which are vacant at the moment. We've got no vacancies on rentals, right? There's a shortage of rentals out there. Is it going to be like that forever? No. But is it a great time? Let's just go and everyone go and buy in there and push the prices up. Go and push the prices up. I bought in there beforehand. My investors bought in there beforehand. Where is the next Gold Coast? Where is the next Brisbane? That is what I focus on. But most importantly, we have this article that comes afterwards. Australia's leading economists, these guys are all fucked in the head anyway. But anyway, Australia's leading economists want job seeker boosted by $100 per week and tied to wages. They go to these sort of indoctrination camps where they go for their 4 years Pledge of Allegiance and get brainwashed to, spit out sort of rhetoric from the belly of the beast and the system itself. This article, I don't know where it came from. Once about as high as the pension, the job seeker New Start unemployment payment has fallen shockingly low compared to living standards. It is now only 2/3 of the pension, just 40% of the full-time minimum wage, and halfway below the poverty line. Job seeker has fallen relatively to other payments because while the pension and wages have climbed faster than prices, job seeker, previously called New Start, has increased only in line with prices since 1991. Very convenient. It is an apparent acknowledgement that job seeker had fallen too low. The government roughly doubled it during the coronavirus crisis, introducing a supplement to enable people to meet the cost of their groceries and other bills. But that supplement is being wound down from $225 per week to $125 on September the 25th, and again to $75 on January 1 before expiring on March 31. After March, single-rated job seeker, including the $4.40 per week energy allowance, will drop back to about $287.50 per week. They have to keep these stimulus packages happening. They've been putting these stimulus packages in for the last 10 years, 20 years, 30 years, 40 years. The more the stimulus packages come in, the more that line starts going up and up and up and up and up, to a point where we cannot control that. They take away the stimulus package, the system implodes. They print more money, the system implodes. The difference is that's different from when we saw this here. This was from the Depression, right? Those of you checking in now, watch the rest of this video. For those of you that were watching beforehand, people couldn't afford shit, right? They didn't have money. They were in a tightening facility. They didn't have the ability just to print more money and manipulate the system. They are manipulating the system. My debt is worth so much less than what it was at the start of the year. And personally for me, I look at debt as the asset. And tonight, I was meant to be talking about certain things on here, but it made me think about something recently that Robert Kiyosaki had said. For those of you that don't know who that is, it's a rich dad, poor dad guy. He said something I heard recently, and I was like, wow, that is, no one could have said it better than what he did. I'll find the article, the video that he made, and share it on the Birch feed. But he went in and he said that he loves debt, very much similar to what I've been saying to everybody. I love debt. I look at debt as the asset. He looks at debt as the asset. Smart people, wealthier people. When I say smart people, I'm not saying I'm a genius, but people that look at it and understand it. You want to be the world's best golf player, understand your game. You want to be the world's best musician, go and be the best at your game and understand it. You want to be the wealthiest person out there, have a good relationship with money, understand how it works, understand all the parameters of it, and sort of take advantage of the situation. But the debt, I believe, is the asset. No financial advice for all my commie friends that love to watch here and want to write letters into me saying that I may board around financial advice. I'm not a financial advisor. I'm just a crazy guy on the internet talking about funny things which make money and make a lot of sense. So if we look at debt as an asset and flip it around where people look at debt as a liability, if you were to get let's say $1 million, right? How long would it take you to save up $1 million? $1 million would take forever, right? Let's say someone's even on 100 grand, right? Most people are on 50 grand, 80 grand, 100 grand. Let's say someone's on the top end of town, they're on 100 grand, right? On 100 grand, they're going to be paying taxes, right? They're going to be paying like 30 grand, 20 grand, whatever in taxes. They're going to have not much left over. And it's going to take them 10 years, 20 years, 30 years, 40 years to save up $1 million. You have to pay tax before you can save your money. If you go and take out a loan, you don't have to pay tax. It's free money. It's tax-free money that you're obtaining. So if you're getting your money via debt, right? If you understand how debt truly works, you understand how currencies truly work, you understand how the monetary system truly works, you will view debt as the asset. Debt will be sorry, my got pop-ups popping on my screen here. Emails updating. If you understand how debt works, you will understand that debt is the asset. It becomes irrelevant with inflation. Debt of 50 grand going back 20 years ago would have made all of us feel like we're going bankrupt. Debt of 50 grand today, most of you got a car loan worth more than 50 grand and you don't give a shit about it, right? Debt becomes irrelevant with inflation. So inflation is making it your friend. Debt is the asset now, and you don't have to pay tax for it. So you go get debt and you're paying 2 or 3%, right? Imagine on 100 grand worth of loan. Let's call it we've got a 100 grand loan. How long would it take you to save 100 grand? Let's say that you saved up $1,000 a week. That'll take you 2 years. If you save $2,000 a week, that'll take you 1 year, right? For that same amount, you take out a $100,000 loan and pay 2 or 3 grand a year. That's $40 to $60 per week to hold that debt. If you were to save $40 per week, that'd be 2 grand a year. 2 grand a year over 10 years would be 20. That'd take you 50 years to save that up. Because the cost of debt is so cheap, the debt becomes so irrelevant, right? And that's why when we look at these charts, it is checkmate. It is absolutely checkmate. We are going to go through the roaring 20s. It's not because the stock market's great. It's not because these companies are great. It's not because they're profitable. The fundamentals are completely off the table. It's completely fraud. You are taking debt which you don't have to pay tax on, right? It is tax-free money. When you pull money out of your property and get a loan on it, right, that is tax-free money. You don't have to pay tax on it. You have to pay interest, but if you took out $100,000 and you had to pay 30% tax on that, that would be like 3% interest for 10 years, right? But you wouldn't be able to obtain the asset now. You'd have to wait for that 10 years to save it up. You could take that $100,000 today and pay 3% interest, which wouldn't even be the tax rate on it, over a period of 10 years, and seeing the inflation erode the value of it. So that is the power of understanding how the currency works, understanding how the debt works, understanding how the money printing works, and understanding the fundamentals that are completely off the table in 2020. Not a time traveler, I haven't traveled to 2021 yet, but that is the year that sits ahead of us here. I'm very excited, very optimistic, and there's lots of cool things to come in the year to have ahead of us. So I will actually get back, because that only took 2 seconds to explain. I will make a secondary video on that and keep it concise, and maybe make a little video drawing on a whiteboard. Debt is the asset, not your financial advisor. Not financial advice, not your financial advisor. The commies from the government that want to write me in letters, they're not actually from the government. They're the fund police to the financial system and regulators. I'm not a financial advisor. However, my view on debt is that debt is tax-free money. And if you can understand how it all fits in, there's so many opportunities, and there's so many people that are making money from it, that will be making money from it. And that's the exciting part of this decade, as we see inflation eradicate the value of our currency. All this money, the only way for us to get out of this is for them to inflate the system and crash the currency, so they can pay back this currency that they have created. It's a fun time to be alive. So, getting on to some of your questions, I've got my team have put together some questions from you guys, and I'm going to attempt to answer some of these questions. If you do have other questions, feel free to write them in the message comment section. And I've got some of your questions on my phone as well, which I haven't turned my phone on, or this phone, for about 2 weeks or so. Do you have a price target for the next Bitcoin run? No. I don't have a figure. As for how high it could go, if we look at the run of Bitcoin, if we actually put this chart, which is the M1 money supply, if we put this chart over Bitcoin, we would basically see the same sort of chart for Bitcoin over time. It has a few little blips in the middle, but you don't notice it when it all takes off. Bitcoin could hit very easily into the hundreds of thousands of dollars. I think it will hit that. I'm very heavily invested into that. I continue to be invested in it, and it is an exciting marketplace. Do I suggest for everyone to go out there and buy Bitcoin? No. I bought my first Bitcoin at about $500 a coin, and at 25,000 Aussie, it doesn't really excite me. But for someone getting into it, I think everybody should have some exposure to cryptocurrencies and to Bitcoin. So you don't have to go out there and buy a whole Bitcoin and spend 25 grand on it. You could go and buy a part of a Bitcoin. You could go and spend $100 and get $100 of it. If it goes from 25 grand to 250 grand, and your $100 could then turn in from $100 to $1,000. So I don't have an exact price target for it, but yes, it could hit into the hundreds of thousands of dollars territory. I do believe that principle. Do you think the stock market is a forward-looking indicator for property? No. However, I think that monetary creation, manipulation, and fraud, right? Fraud from these financial markets is the answer to it. And that will inflate all different markets, whether it be the stock market, whether it be the property market, whether it be the cost of your food, your groceries, your Christmas presents, electrical components, whatever it is that you're buying, everything is going up in value. I'm looking at the monetary supply, manipulation of the currency, and making predictions and prognostication based on the fact of where the so someone just sent me a text message. I was like reading the text message at the same time, got me off guard. So yeah, looking at the amount of currencies being printed. If interest rates went up, we've got, just remember, I haven't talked about it for ages, right? We've got the interest rate from the RBA at 10 basis points. There's 10% of 1% is the interest rate in the country, right? 10% of 1%. If interest rates went up just to 1%, all the people that have taken out all of this money that's been printed would go bankrupt. And this isn't people, this is countries, currency. These are countries and companies and people and governments and all different interests which have taken out this cheap credit. So no, I think that the stock market is a bubble. I personally own zero, a big fat zero stocks or shares at this point in time. I have no paper assets. Predictions for new build suburbs that is all around at the same price. That is the cool thing, right? I'm glad that someone's asked this question through to us. Predictions for the new suburbs that is all around at the same price. It is at the same price because people can only have a debt ceiling. They can only borrow a certain amount. So that will limit the market. The property market will only go up to what people can afford. The reason why I like the bottom end, and I feel it's a recession-proof property portfolio, having the right strategy behind that, is because those properties at the bottom end, if they're building $1 million house and everyone can afford $1 million property, think about it. $1 million loan, 2.5% interest rate. I was chatting at my last map session without going into any details. Person's got some debt, 2.69%. It was actually stuck in my slide deck and it was sitting on the bottom of that. Because I had a map session just before this. They're paying 2.69% interest rate, right? If you had $1 million worth of debt, that would mean 26.5 grand a year. That's $500 a week in interest repayments for $1 million property. It's cheaper than renting a property to buy a $1 million property. How will it go up to $2 million? Right? People can't afford that. But if they lower the cost of money and it goes down to 1% interest rate, it will make a big difference. And if you think about it, right, just going back to our comment about Bitcoin, for those of you that know or don't understand how Bitcoin works, there is like 8 decimal places, and you can have a part, right? A part of a Bitcoin which is called a Satoshi. It's a sat. And one Bitcoin is like 1 billion, 10 million Satoshis, right? And you have all of these little small parts. So think about it like dollars and cents. Imagine if we broke down our interest rate to 20 basis points at the bank, or 30 basis points, or 40 basis points at the bank. We could break it down all the way down to fractions of percentages as interest rates. That is another model that I've never talked about beforehand, but you could have fractions of percentages of interest from the bank and still make massive amounts of profit. So you could break it down just like a Bitcoin and look at interest rates. So all of these new housing areas being so I'm just reading other comments over here. I'll get to the comments here shortly. If you've got all these properties, how will they go up, and are they the best things? I'm still buying properties in Sydney for 280 to 330 grand, 350 grand. I'm buying properties in Brisbane for 140, 150, 160. Gold Coast 180 to 200. Buying them all around the country, every little pocket, right? Cheap things like 20 grand, 30 grand, 50 grand, things off market, things on market. Cheapest property we bought this year was $9,900 for our investors. Actually, $9,500 I think it was for the property. So, yeah, with it, I think that they'll just keep printing money and they'll keep printing housing, and literally just printing it out. And then we're gonna, when we see our borders open up, which is going to get me to my next, and I'm actually going to go straight to this, right? This is an article. This is another one from news.com. Australia's act that sparked feud, trade war, and Twitter row with China. So they're never blaming the actual root cause of what the fuck has happened here. Last week I spoke about how the monetary system was destroyed. In 2001, there was two fellas, Saddam and Gaddafi. They tried printing their own currency and trading oil in euros and in gold. Within 6 months of doing so, they were dead. On the 28th of March 2018, go back and look at the notes, go watch last week's video, go back through the notes. China started printing their currency with a petro yuan. They were devaluing the currency, and they couldn't start a hot war because there's a lot more Chinese than what there is Americans, and they would have more human capital to blow the shit out of the US, right? And you've got to think about it, who is backing China? The ones that are producing, the ones that are making. As I've referred back to this a few times lightly, these guys are the ones that are the rightful owners of the currency. They're the rightful ones of making the money, whether you like them or don't like them or whatever your thoughts on. That is, these guys are becoming a superpower, and they will continue to be a superpower because they control the currency. They're hijacking the monetary system. They're going, the reason that caused this trade war. No, they're not. China just want their own Pine Gap. If you don't know what Pine Gap is, go and research it. Pine Gap is a station that's located in Northern Territory, which is a US military base. Why do we need a US military base here for? Because Australia has done a deal and done a treaty, right, which is why it's the Northern Territory, an Australian capital territory, where all the commies reside over there. And no, not offence to my friends that are from Canberra, but you know the people that I am referring to, right? The controlling powers, which have put together a military base. There is a Pine Gap, there is a US military base on every continent in the world. They don't talk about this. Where did you ever see Pine Gap on the news, right? See the Kardashians, and they've got nice tits and nice ass and all these things that everybody aspires to be and have no class, but no one puts in there stuff that you want to read, stuff that we should be reading, right? It's just stupid fluff. For the record, I don't like the Kardashians. I'm just saying that people get drawn to that sort of cheap, crappy, priceless, tacky sort of media. But here we are, the Australian Act that started the feud and the trade war with China. It didn't start with that, right? This is a power play, right? How is Australia going to take off through this, right? We're very blessed, right? Property is just one of the things that we have at our disposal. We have lots of Chinese which would like to be in the country. We are a much nicer place. There will be a deal at some point, very shortly. So I just got more text messages coming through from people. We will see a point where we will end up having to do a deal with China, and we will have mass immigration. When we have mass immigration, it's going to create a new boom. We're going to see all these people coming in. They're going to be doing skillful works and all these sorts of things, and we're going to need housing for them. So that we'll see another part of stimulus packages to our country. Am I concerned about it? No, right? Kim Jong-un didn't go and create a big war. He didn't nuclear blow up everybody. All that simply happened with Kim Jong-un is he's done a deal. He's sold himself out and done a deal to get a central bank installed into North Korea. Now, if we look at the history and the origins of where North Korea comes from, it's a bit of a tangent. Back in the Korean War, China had allegedly, backed North Korea. In return, North Korea was to do a deal that they are the military base for China. So when this trade war started, we started seeing Kim Jong-un, bad guy, let's tarnish him, let's drag him through the mud. Next minute they do a deal and they go, oh, Kim, he's the best guy ever, we never hear about him anymore, right? Have they disarmed him? Have they tried to take away some of their weapons, right? We've got to be questioning the information that we're seeing and seeing what their next move may be, because we're living in a world where you've being brainwashed and manipulated to believe some, little crap soapy shit with, fake bitches and fake world and fake food and fake belief systems, right? Without questioning this sort of stuff. So it is a bit of a rant and a bit of a tangent, but question the media that you are reading out there. Next question was, where is the property market heading in 2021, specifically the Wollongong area? Um, the property market across Australia is heading up. It is heading up. Um, do I think Wollongong's a good area? I think it's a cool area. It's south of Sydney. It's on the water. There's lots of potential. There's lots of infrastructure going in. A lot of people moving there. A lot of people going there for lifestyle. However, I wouldn't go and buy in any specific area and go, oh, this is the greatest hotspot in the world. I'd look at it fundamentally for the numbers and work out what are my goals, how is this property going to help me get to my goals, and what is the sort of tenure. I don't speculate when I buy properties. I buy properties that are distressed, below market value, below rebuild value, and that are purchased with good solid value and good solid fundamentals for growth and for cash flow. Wouldn't it be hard for mum and dad investors to maintain their investment until hyperinflation due to that said word that I will not say with the numbers attached to it? How do you overcome this obstacle? I have three principles of buying a property. First, buying it below market value, gives you an upside. Buying it below market value has, two parts to it. The first one is that you've got, the ability to go back and pull equity out. And the second one is simply due to the fact that when we buy it below market value, that we've built a buffer in place should anything go wrong, that you've got the ability to offload it. So if you're buying a property for 200 grand, it's worth 250 grand, then the property market would have to drop from 250 down to 200 before you would be hurt. If the market dropped by 20% in capital cities, there'd be bigger problems at play. Second thing is to make sure it's got an upside for capital growth. If it goes from 200 grand to 400 grand, that is the goal. You don't want to buy a property that's going to be worth 200 grand and go backwards, or a property that's going to be worth 200 grand a day and worth 200 grand in the future. So many people do that. I've been a part of over 10,000 real estate transactions, probably looked at about 60 to 80,000 properties, specifically put offers on them and whatnot over the years. And I see so many people in my research that I look at that are selling properties for either what they paid for them or for less than what they paid for them. There's probably about 80% of the population that don't make any money. So making sure it's got upside for growth is really important. Buying it below market value is very important. And finally, you want to make sure that it's got a neutral positive cash flow. So it wipes its own nose, I was going to say arse, wipes its own nose. It's got its own heart, lungs and respiratory system in it to be able to look after itself and get you to where you want to be. If you've got a property that's giving you $100 a week and you've got 10 of them, there's $1,000 a week, there's 50 grand a year. You could replace your income or use that income to pay your mortgage or whatnot. I speak to people on a daily basis. They say, should I get a principal place of residence? What should I buy next? How should I do it? And it's important to, sort of look back at the fundamentals and the goals and work out how can you build a lifestyle that's for free. I don't pay for the things that I want in my life. I make sure that I have investments that are paying for those things for me. I just realised that I'm going with a lot of time here, and I've been talking. I've got more things to talk about a little bit later, which is just really fun and interesting topics in the story of my life, and I'll talk to you about that course very shortly. So, as for that question number 5, would it be hard for mum and dad investors to maintain their investment until hyperinflation comes? You want to make sure that you are buying the property with the 3 fundamentals and you can hold it throughout any market. If the market turns to shit, you can always sell it and get your money back. It also gives you the ability to be able to replace that equity, pull the equity out and use that as deposits to grow your position. Second thing, making sure it's got upside for capital growth is what you're looking for. And finally, having the cash flow where it's neutral positive cash flow. If it's positive cash flow, you can hold as many of those things as you wish. I don't see, if you have the right strategy and the right position in play, that you would have any issues, in being able to, hold on to the assets and hold on to that portfolio to get you to the other side. Number 6, the pros and cons of NDI homes. For those of you that don't know, there's a thing called NDI, which NDIS, I think it is, National Disability Investment Scheme, potentially. I don't know too much about it on that front. Every time time to time, government come out with these little schemes to try and boost up stimulus packages and support different markets. And there's this thing where, which I think is a bit of a Ponzi at the moment. There's so many people talking about it and trying to build these homes at a premium, which are like a house, but you've got like all these disabled things going on with them. So you can rent them out to the government, and they pay these rebates, these government grants and stuff like that to build these properties. Personally, haven't done any of them. I'm personally not looking into them because there is extra elements of risk. You're building a property which could be like building a normal property, however, it's got all disabled stuff with it. So you'd have random bathrooms everywhere. You'd have all these different things going on with it. Buying the property that would be that way has extra costs. Like people that are building these things know that you're making a premium, so they try and that's their cream, that's their part for creaming on top. So looking in the past, different things that have occurred, like the NDI scheme. There's been people out there pumping granny flats. There's been people out there pumping dual key investments. There's been people out there pumping holiday rental properties. There's been people out there pumping off the plan properties. There's been people out there pumping NRAS from back in the late 2000s. I'm buying properties today which are 200 grand. They used to sell for 300 grand back in 2008, right? They are a part of NRAS. That was the last scheme, right? It's called a scheme, right? I don't invest in the schemes. I invest in the fundamentals, and these things are not up my alley. I always make a joke when people ask me about this, and I say, well, if everyone's going to go in and get their little vaccine, I'm going to probably be shadow banned after saying that word, then we're going to probably need to get a lot more of these disabled properties for people to go and live in. Number 7, any advice on getting into the Queensland property market? As I said beforehand, I'm the largest buyer of properties, residential properties in Queensland. I've been very aggressively buying in there. I've got 28,000 real estate agents in my database that I deal with on a daily and weekly basis. If you need to get into the Queensland market, I am your guy. I locate, negotiate, and purchase the properties for my investors and build out their portfolios personally. So if you need help getting the market, reach out to me. I buy properties. I've got 3 that I just bought probably 2 weeks ago for investors, which were $55,000 rent for $250 per week. So as cheap as that in all the capital cities and all the regional markets as well. I did actually just notice a drop down from the amount of people watching when I said that word, which is pretty funny. Number 8, responsible lending will change next year. Will there be opportunities to build a large portfolio? Yes. There's so many people sitting on the sidelines wanting to get into the market, which can't get finance. If it wasn't for the finance hurdles, half of you guys that are watching this would be buying properties at the moment. However, when the lending market changes, I think we're going to see massive influx into the property market. How often should you review your current lending position? Number 9, you should be reviewing your current lending position every 12 months. If you haven't reviewed your lending and your loan position, I have a finance company called Zinger Finance. You can flick us a message on the DMs here. Send us an email at admin@binvested.com.au and we'll put you in contact with the team, or contact them directly at info@zingerfinance, ZINGER, finance.com.au. There's no red flames around it. The word means uniquely different, and that's what we do. So with our investors, we do annual reviews on their portfolios and on their positions to see what ways we can save some money and increase their cash flow and their equity position. So we had one of our investors this year, which ended up restructuring their loans recently, $3 million worth of loans, saving $50,000 per year. It's $1,000 per week from just restructuring their debt. And that's without pulling out any equity or paying down any of their debt. It was just restructuring what they had and getting themselves in a better position. So if you have got a loan, you're thinking of getting a loan, reach out to my team. They're very experienced with doing and specialising in large property portfolios. Let's see what we can do to help you, improve your position. You should be doing it every year, and what a better time than doing it at the end of the year and the start of the next year. Due to that word that I will not say with a number on the end of it, finding tenants are very hard. How would you mitigate this? Um, Looking at where your property is it in, I'm seeing all around the country, a shortage of tenants. I was talking to someone the other day on a map session once again. I was driving on Saturday afternoon, and they said to me that they've just moved to Perth and there is lineups. There's like 50 people applying for a rental property. One of my investors here had one of their properties over in Perth. They did a media article on it. The news came in about finding tenants. It was, there's a shortage of properties for tenants. Same thing is occurring on the Gold Coast. In Sydney, I've got 2 or 3 properties that would be vacant at the moment. Actually, I think it's 4 that are vacant at the moment. I had a meeting with my management today, and they told me their numbers, but I've got so many numbers that fly around. I don't know exactly what numbers were what. I feel like I'm going to sneeze for some reason. So yeah, if you do have a rental property and you have an issue finding tenants or whatnot, reach out to my team. We'll put a strategy in place to make sure that you get a tenant in there, and you get the cash flow sorted out. Number 11 question, clients that you've worked with that have made a positive change this year. I've had more investors in 2020 start building their journey building their portfolio than any year beforehand. I've got more investors who have gone from 0 to 6+ properties in their portfolio than any year beforehand. I've seen more equity gains in 2020, and the cool things where people can get into a deal and pull out the equity. Whether you've got 50 grand, you buy a property, you pull out 30 grand or 40 grand, you go back, pull out 30 or 40 grand. I mean, pulling out equity within a week of settling the property. So, with a smile and a felt tip pen, you can get the money. You can get the bank to give you as much money as you want. You just need to have the right strategy behind it. So, this year, has been really, really beneficial for our investors, for our community. I hear of your stories that I don't work with. I can't help everybody. I've had more map sessions and strategy sessions with people. I'm booked out until middle of February next year already for strategy sessions. But yeah, like really, really cool stories that we've been seeing, and people that have been able to help in the community on their journey. Lots of people making money from investing. Some people that have retired. Some people that have replaced their income this year. I just did a deal for someone the other day. It was a 600 grand property. It used to sell for about $1.7 million, and is positive cash flow $30,000 per year. So, 30 grand is half of an average salary. Lots of people making lots of cool moves out there at the moment. So, on that, I'm just going to have a look at our questions here. We've got a fair few questions. I'm going to try and read through some of the questions in the message box here. And then I've got a few other things I want to talk about. And I'm going to keep us close to about an hour tonight as possible. We've just clicked over the hour. Jason just asked, goals for 2021, Nathan. How do you write your goals and achieve them? Any advice? Good question, Jason. I'll get my team to send a little message and post it next to you, underneath you later on. Last Wednesday, I did a 3.5-hour webinar. It meant to be like an hour and a half, 2-hour webinar. It went for 3.5 hours, and I think I would have given myself a 10 out of 10 for the level of content that I gave. It was all around goal setting, goal planning, and 2021 strategy. So make sure you watch that webinar. I think there's limited time on these webinars. They disappear after a while. If you haven't watched, if any of you guys are watching this live stream and you haven't watched that webinar, do yourself a favor. You can either go and brainwash yourself with shit on Netflix. You can go and watch some dumb shit out there, or feed yourself to improve your position. If you haven't watched it, make sure you get access to the webinar from last Wednesday. Reach out to my team and say, can I get access to the goal setting webinar? It will step by step show you certain things into intricates on how I do my goal plan myself. So I'm not going to be repeating that this week because I did 3.5 hours on it, and I'm sure you'll love it. So if you do like it, hit up the likes, and if you can, even just write me a little message on Facebook as a review or on Google as a review to try and push us up in the ranking and keep us on top as always. Pete, do you have an idea of inflation might trickle down economics into wages so we can put our rents up? Good one. I don't have a time for exactly when that's going to happen, but it's going to be an exciting ride to see what will be happening with the rents. My one of my income streams. I always think it's important to have multiple income streams out of my businesses and my group of companies. I have sort of a dozen different businesses with different income streams. One of them is collecting rents on behalf of owners. I'm really looking forward to doubling those rents because then the income doubles to the business as well. So I'm all for that. I'm always looking for ways to see, where markets are going, and I get to see a good litmus paper being, the community in the market, and it's really exciting. If we look at Queensland, big growth that we've seen on the rent so far in the last sort of 2 to 3 months. If that will flow into other areas, we could see that in other capital cities. Perth has got a rental boom at the moment. Gold Coast, Brisbane, Sunshine Coast. I've got a property which was vacant for a few weeks at the start of the year. It's been rented it started at 450 or something. It's been all the way up to 580. 580 I think it was at the start of the year. Tenant moved out after a 6-month lease, rented it before it even became vacant for $690 per week, so $110 per week increase. Amazing time. But not all markets are moving like that. If we're looking at Sydney has been hit a little bit. The markets, the rental properties are renting, but the prices did get hit for maybe 24 months previous or prior to Corona. So Gemma, hey to all my current and future clients. For those of you that don't know Gemma is our gun in our office. She is our team leader of our customer service team. So smash up a like. I'm going to hit a like up for you, Gemma, just for the fun of that. Say hi to Gemma there. Anthony, legend. Hope you're doing well, mate. Elisa, the 90-year-old, just got the first vaccine. Crazy. I saw how the Queen was on a tour, propaganda outlet, spruiking this the other day as well. Crazy. Michelle, hi everyone. I just finished work early enough to tune in. Michelle manages those properties that we have in southeast Queensland. So smash up the likes. I'm going to leave a little like there for Michelle as well. Keep doing an awesome job. You're doing great for our investors up there. Steph, I will call you a little bit later. Bevan, hope you're doing well, mate. People in Victoria are buying up property in Toowoomba, pushing up the prices and rents by the news tonight. You never trust the news, but that's interesting. And then Michael, he said, and also Pimpama, the whole market's going nuts. It's crazy. Strap yourself in. If you've bought properties up there, enjoy. One of our investors that have been buying up there for ages, enjoy. Enjoy the ride. It's really cool. Jesse, hey Nathan, would you love to hear your thoughts on possibly a video pricing affordability based on a medium house price, medium income range, and relevant interest rates throughout the decades? I think we might find that it is still more affordable to buy a house today than when our parents and grandparents bought, even though perception is they bought for peanuts and prices are so expensive today. Jesse, very good comment there. I'm going to put a little like on your post as well, so my team can come back and put this away for me to make a separate video on that. I have done some videos on it beforehand, but yeah. Hey Nathan from Steve. Hey Nathan, I joined late tonight. We'll have to watch the start as a VOD Goblin this week. I hope it's been a great one. Just sitting here with Sido, contemplating what life will be once you have made us all retired. Can't wait, Steve. I look forward to, we're on a really good journey with that, and look forward to helping you smash out your 2021 goals. And I think we're ready for phase 2. So we need to chat in the next couple of days for phase 2 now that we've made those last few moves to take on the next steps. The Kardashians are fake. Kim's starting to become a lawyer. Wow, wow. I always shudder when I think of those chicks because I've found a few chicks that try to think they're a Kim Kardashian in the world, and it's terrible. So I think it's way overvalued, and the real estate and builder make huge comms selling and building. Correct. NRAS, dual living, all way overpriced, and huge comms are paid. Staying with buying standalone normal house, I stay. Um, One thing to remember, if you're buying a property that is brand new, generally the developer or the builder or the salesperson that's selling you that property is getting paid between $30,000 and $60,000 for selling that property. So it is inflated so high that all these salespeople and marketers and all these project marketers are getting paid. So that's why I don't buy new properties myself. Um, People get ripped off all the time. Not saying that you will get ripped off buying a new property, but a lot of people do because they're paying overpriced. It's not below market value. Will AUD go up more in 2021? It's a good question. The rate things are going at the moment, yes, but I don't fully agree that it'll go crazy because the US dollar is dying currently. It's not the Aussie dollar is going up, it is that the US dollar is crashing, and they will go through waves and cycles and through tranches. It's certainly great for me paying for things that are overseas. It's not good for those of you that have got Bitcoin, because if Bitcoin was priced in Aussie dollar and Aussie dollar was crashing, it would be worth even more. So you'd be making a higher return on investment just from the currency being devalued. So yeah. Andrea, the webinar was awesome. More than 10 out of 10. I appreciate the feedback, Andrea. If I could have maybe some of you guys share some love with some likes on Facebook, not on Facebook, a review on Facebook if you liked it, and a review on Google under B.Invested if you liked it. It would be really appreciated. I'd put a lot of effort and energy into getting that content out there. I note that Birch Feed's been a little bit light on the last few days. I've just been so busy, and being able to share so much content has been a bit time constrained. But I do put in a lot to try and get information out there for you guys, so you can learn and navigate and take advantage of the current environment. Andrew, how will the US dollar increase in value in respect to other currencies when the Fed prints $1 trillion? That's the word on the street. That is a very good question, and it takes me to my last news article of the evening. I like these new formats. I've got this, got some new marketing staff in my team, and Carolyn gets everything prepared for me, nice little notes ready, so I can come to you guys and provide it. So a big shout out to Carolyn. This one here says, American chaos as a nation's coronavirus epidemic worsens throughout the winter. For months, health experts have been warning of America's grim future if the nation didn't bring it under control. Now that time is upon them. For months, health experts have been warning America to brace themselves for a dark and deadly winter. The predictions were correct. US notching up a record number of cases, blah, blah. Tally by the Johns Hopkins University. Who are these people with the stats? Really, who are they? Looking at these articles that are coming out, it's not looking pretty. And it's the writings on the wall for what is about to come. I think at the start of 2021, we're going to see so much more currency control and money printing and manipulation in the US. So I think the US dollar will fall in its value even further than where it is. But that doesn't come into play entirely by itself. These other countries like our own will have to crash our currencies as well by printing more and more currency. So it's going to be very interesting. If we print more, it'll pull our cash down as well. Another message here on Insta, the 10K cash limit has been cancelled. Has it been cancelled, or has it just been shelved to be repurposed in a different sort of format in the future? It's very interesting to follow that. Cashman, I remember when Scamo was out and he was the treasurer of the country going back in 2018 in May. He was the one that actually put that in just before he became the Prime Minister of Australia. Steve wrote, hey Gemma, what is your role at B.Invested? I don't think we've met, and we should introduce ourselves next time I'm in the office. It would be good for you guys to introduce yourself. Steve, Gemma has sort of taken over sort of what Linda used to do in the office. Linda's our office manager, general manager, and she stepped up to in a different role in the business. So yeah. On that note, guys, I do have more questions from the phone. I'll get to the phone questions next week and answer these things for everyone, because I've seen there's a few that are piling up over there. I've got one last thing. It's just a random thing, and that was this rock that I shared beforehand. I've got to watch out because it's dripping. It's got red dirt on the back of it, and I didn't wash it because I wanted to share its authenticity with you. And I took a video the other day about a property that I purchased, and I had some mates with me, and one of them was from a mining town, and he's like, "Wow, look at this!" He goes, "You've got quartz in the property," and we were talking about it and looking where it's at. And I've brought these back as samples because we're going to crush them up and see if we can mine them for gold, right? And looking at where the properties are located, it's in a gold belt. There's a lot of things to indicate that there could be potential gold out at the property. It would be fun to see. So just going to see if we can extract some gold. Imagine having little. People say you could be sitting on a gold mine, right? But let's see what we can do. I've got a ute tray full of quartz at the moment. Going to from all different locations and pull all different samples. Going to crush that shit up, sort of process it and see if we can pull out any sort of gold flakes or whatnot. Sending some people out there with some gear to see if we can, find any deposits. So basically, there's different ways. I'm not the smartest when it comes to this sort of stuff. A lot of people said, "Oh, Nathan, how do you know all these things?" You see the red dirt. Red dirt is like iron ore. Also indicates rusty sort of metal particles, the dirt. Looking into these cracks, you'll find gold and different deposits. So there's deposits inside creek, so there's a flowing creek of about 1 kilometre through this property, there could be nuggets out there, could be all different things. So gonna go and crush some of this quartz up. I did post a video the other day in the Birch feed about how gold is found, how gold is mined, and how all that works. So there's random stuff. I try to live a life that's on my terms and have fun with that. And fortunate enough, I was able to do that at a young age with building a property portfolio, removing myself from the workforce, and I try to have fun with life. There was a point where I used to go out there and buy Bentleys and think I was awesome because I had cool cars and stuff like that. However, now it's more of a simpler life, and I just enjoy random stuff, and my life has never been more richer. I've got more things going on, more assets. I'm focusing on just continuously doing things that are improving that position. And who knows where this quartz and the rest of the quartz could go. Also found some fool's gold out there. Found a lot of slate in the property, which is really interesting as well. So just as a wrap up for this evening, I've got something cool next week. I bought out one of my team members. I bought out a lot of my customer service team going back about 2 months ago. A lot of you guys fell in love with one of my team members and said, "Who the hell is Jeremy? This guy's the most randomest guy that we've ever seen. We didn't know you had him in the office. We want to see more of him." So next week, I will have a special guest, Jeremy Johnson. We'll be discussing certain different topics, some of the regions, like whether we're looking at gold or different minerals in the ground, some of the mining areas I've been looking at. I understand how the economy works, how financial markets work, what happens with some of the resources out there. I have and had been buying in a lot of mining areas when the markets would smash, like picking up things for like 10% of the value of what they were a few years ago. I'll be talking about predictions on economic forecast, how I'm currently accurately forecasting and how I've been able to grow the business with all these things being instrumental for clients, having the information. Reality of hard assets during uncertain times and the importance of having access to hard assets, not paper assets, not things that are being manipulated. How people want to control their lives during the lockdown, the scamdemic, Changing demographics of the nation, overseas travel means more people will be moving within the country, and yeah, we're going to be bringing Jeremy on and having a really, really cool and interesting chat with him. So if you've got some questions for Jeremy, um, I'm sure you will love it. Make sure that you guys are live and you're not watching this as a after record on YouTube or the next day or whatever in your car or whatever. Be a part of it because Jeremy is a very, very fun guy, very knowledgeable guy. And if you guys thought that I was out there with information on how I talk about things, Jeremy is a whole different character with the amount of information and knowledge. He's really, really cool guy to watch, and I look forward to having him on board and coming onto the Facebook Live next week or Instagram Live as well. So on the on that note, I'd like to hear more from you guys, what you'd like to hear from us. If you want to put in the comments as to what you'd like to hear from the community, what you'd like to hear from me, what sort of topics you'd like to be covered. Put them in the comments. My team will pick them up, or send us a private message. The team will pick them up, and I will do more lives around what you guys want. Also, it is coming up to the end of the year. We will be having Christmas and New Year's and all that sort of stuff. I will be going on holidays. I will be in different sort of locations and sharing cool things with you guys. So be tuning in. I won't be doing the standard sort of Tuesday night live. Maybe we'll call it the summer edition. So I will be more sporadic. I will be doing it from different locations. I will be very specific with the topics. Might be doing it by the poolside. I think last year I did bath time with Birchie and bedtime stories with Birchie, where I was having a bath and doing a live. So watch out for that. But yeah, so I think maybe next week might be our last one for this year, and then I'll be doing sporadic sort of videos over the period of the late part of December, the new year into January, and we'll get back to the Tuesday night chat sort of format as of February next year. I just saw one last comment here from Nate. It said, can you share the link to the webinar? I will be sharing the link with the webinar. Make sure that you guys tune in before the webinar so you can be active and a part of that. I was interactive with the community when we were doing the webinar. So it's a 10 out of 10. Like, I know that what I put out and spoke about last week, everybody gave raving sort of feedback on. So make sure you get access to that webinar. It's free content, just like everything I put out there. So on that note, guys, I'll see you next Tuesday night at 7 o'clock. Keep being awesome, keep kicking ass, and make sure that you're planning for your 2021. Will 2021 be the biggest year of your life? How was your 2020? Did you reach your goals? This is what I'm going to leave you with tonight, guys. How was 2020? Did you reach your goals in 2020? If not, why not? If you did, give yourself a pat on the back. Work out what your next year goals are going to look like. Work out, where are you going to go? Who's the person you're going to be going into 2021? Who's the person that you're going to be at the end of 2021? Work out a strategy and a plan of attack to get there. If you need help on that front, you can reach out to my team, 1300-367-925. Email us at admin@binvested.com.au. Thanks for watching, guys. We'll catch up soon. Bye for now.